China and Egypt have concluded an 18 billion yuan three-year bilateral currency swap deal. Importers and economists say the move will facilitate trade and improve foreign currency liquidity in cash-strapped Egypt. Egypt's central bank says the deal with the People's Bank of China could be extended by mutual consent. Of course, China has carried out swaps like this with more than 30 central banks around the world to increase the use of the yuan as a global reserve currency and, of course, to stimulate bilateral trade. Now, the yuan is traded onshore against 16 major currencies. Egyptian importers say the deal with China will allow them to source yuan directly, facilitating imports from China while reducing demand for dollars and easing pressure on the Egyptian pound. Well, let's get more insight on this. Adele El Maroui joins us in Cairo. Adele, as always, welcome to the show. Now, of course, Egypt's government has said this deal with China will allow it to shore up its foreign reserves, and certainly it'll support its reform program. Give us some insight into how this currency swap will work.
Well, basically, as you briefly summarized, it's a swap in currency through which China and Egypt, instead of both countries relying on the US dollar as an intermediary currency for their direct trade and services exchange, this will be lifted and the direct trade will be between both countries in these foreign currency reserves. Now, to make it closer or clearer for our audience, the 18 billion yuan are basically around $2.6 billion. China will get their equivalent in Egyptian pound. Egypt will get the 18 billion yuan from China on the 3 years plan as the first signature or the first deal states. But basically both countries have remarked that they might be willing to extend that deal once they try it out and see how successful this experiment will be. Now that will make Egypt's dependency on the US dollar drop, as these $2.6 billion or the 18 billion yuans represent about 1/4 of Egypt's annual imports from China. Therefore, at least 25% of Egypt's dollar usage that it used to allocate for its trade with China will be saved, and therefore will alleviate the pressure that the US dollar has been crippling the Egyptian pound with. On the other hand, China's 2.6 or the equivalent of about 46 billion Egyptian pounds will help China to, first of all, cover the Egyptian exports going to China, covers the expenses, which is still not clear, but this what many experts believe is that this exchange will help also to pay the fees for the Suez Canal for Chinese ships that is passing through the Suez Canal. That's beside the regular tourism, the annual tourism industry through which Chinese tourists will be equipped with their own pounds from China when they come here. So it seems like a win-win for both countries. Egypt will alleviate huge pressure. China will strengthen the circulation of the yuan globally, as you've mentioned, and Egypt is one of the first experiments in the Middle East in that regard.
Well, Adele, let's talk a little bit more about what this means for the Egyptian pound going forward. Of course, analysts say larger reserves mean stronger firepower on the part of the central bank, which of course should boost confidence in the pound and support Egypt's flotation process. Now, what is the outlook for the Egyptian pound with this in mind?
Well, absolutely, it will give a strong support to the Egyptian pound. First of all, there's at least $2.6 billion that Egypt used to multiply 3 times to reach its trade volume with China. It will not be needing this amount, so that's $2.6 alleviation from Egypt's annual demand. That's one way to put it forward. Also, this is considered as a foreign reserve basket, so it will support Egypt's foreign currency reserve, and therefore would give the government confidence in keeping the flotation process. It will also make the government capable to interfere once it sees necessary. As you know, Egypt imports most of its consumption products annually, and there's a huge gap between its imports and exports. So basically, the more currency it have in its basket, the more relaxed the Egyptian government will be, the more tolerant the economy will become in receiving further hits in the economy.
Well, many thanks, Adel, for those insights. Of course, Adel El Maroui joining us in Cairo.